Good morning. For those who don't know me, I'm Jay Epstein, the co-chair of the 2016 DLA Piper Global Real Estate Summit with my partner Sandy Kelman. On behalf of our 500 real estate attorneys around the world, the leadership of DLA Piper here with me today, Global Co-Chair Roger Meltzer and Global Co-Chair Emeritus Lee Miller, and the new co-chair of our global real estate practice, Karsten Lowell from Munich, we welcome you to our 13th Global Real Estate Summit. Our last event of this kind was in September 2014. At that point, with the U.S. economy in the midst of a powerful economic recovery and historic levels of capital flooding into property markets, commercial real estate executives were broadly and rightly confident that the sector had finally regained its footing. The findings of our 2016 State of the Market survey aren't quite as bullish this time around. While optimism remains widespread, it's measurably tempered as executives see uncertainty both at home and around the globe and the possibility of this strong cycle coming to the end. So where's the caution and the concern coming from? U.S. commercial real estate sales dropped to $25.1 billion in February, compared with $47 billion a year earlier. ULI, in its March 2016 real estate consensus forecast, said that mild caution was the prevailing outlook. And real estate researchers predicted slower economic growth, slipping real estate fundamentals, and lower returns. But while foreign investors, particularly those in China, are downright bearish about global markets, they continue to look to the U.S. as a safe and secure haven. And uncertainty in the global markets, among other things, have kept U.S. interest rates at a low, allowing for strengthening real estate fundamentals. Then there are the macro-level trends disrupting the marketplace that have fundamentally changed the industry and our ways of doing business. For example, millennials, now the largest segment in the American workforce, continue to shape the next generation of commercial real estate, prompting executives to buy, retrofit, and develop properties with millennials in mind. While the impact of WeWork is well known, I recently heard that landlords in major markets were signing 2-year leases for not insignificant amounts of space because the tenants could not predict their personnel and space requirements beyond that short-term horizon. And then I saw a seminar titled The Death of the 10-Year Office Lease, where the following question is being asked. Is the commercial real estate industry undergoing a structural shift in office leasing to accommodate the rising number of startups and fast-growing tenants? So that all raises a host of critical questions, including the question that brings us here today. What is your next move as you navigate the maze of opportunities, risks, and disruptions facing the U.S. and global real estate markets? The experts generally believe that economic cycles run for 10 years. One can debate exactly when the current cycle began, but Sam Zell recently predicted that the U.S. economy is in its 9th inning and that global issues will likely push the U.S. into a recession next year. Sam, always the optimist. While others have also suggested that the growth rate of the past 7 to 8 years is nearing an end, we surely have learned this year that the past is not necessarily prologue, and predictions of future behaviors, such as the prospects for certain presidential candidates to win their party's nominations, are far less certain than before. In fact, while Sam thinks we're in the 9th inning, he might not know the score. Perhaps the game is tied, and we're going into extra innings of an undetermined duration. So given that uncertainty, where we go from here is anything but obvious. But we hope that today's program will help to provide guidance and perhaps even clarity. So before we hear from our distinguished keynote speaker about what the future holds, I want to just make a few announcements. The schedule and location of each session is contained in the materials that you've received at registration and on the back of your printed name badges. Should you have any questions or need assistance from anybody, our lawyers and our staff are here to help you all day. Please stay in this room as soon as Steve and Michelle are finished, where we'll start the second session. While we ask everyone in the room wants to remind everybody to put your cell phones on silent, we encourage everybody in the room, as well as those joining us on the video, to follow us on Twitter at DLA Real Estate and tweet about the summit using the hashtag #DLARE Summit. Last but by no means least, I have to thank our Master Blaster event planner, Joy Carlson, and her supporting cast, who have made this event run as smoothly as it has for every one of the last 12 previous summits. So now let's get started. It's my great pleasure to introduce Steve Ross, the chairman and founder of Related Companies. Steve formed Related in 1972, and today the company includes over 2,500 professionals with holdings of well over $20 billion, made up of best-in-class, mixed-use, residential, retail, and office properties in premier markets around the world. Steve is active in numerous philanthropic endeavors where he serves in leadership positions at Lincoln Center, New York Presbyterian Hospital, and the Jackie Robinson Foundation, to name just a few. He's also actively engaged with his undergraduate alma mater in Ann Arbor, where the business school was renamed the Stephen M. Ross School of Business at the University of Michigan in recognition of his substantial support. I could continue on about the many civic and other awards that Steve has won over the years, but I will mention only one other activity that truly reflects who Steve is. Steve has signed the Giving Pledge, the initiative created by Warren Buffett and Bill and Melinda Gates, to which Steve has pledged to give more than half of his estate to philanthropic causes and charitable organizations in his free time. And Steve also manages the Miami Dolphins when he has nothing else to do. Steve will be interviewed by my good friend Michelle Fellman. Following her successful run as the Executive Vice President of Acquisitions at Vornado Realty Trust, Michelle has gone on to found JAM Holdings, an investment and advisory firm which recently advised the Trinity Wall Street Episcopal Church on its multi-billion-dollar joint venture with Norges Bank. In addition, Michelle currently serves as a trustee of Choice Properties, a listed retail REIT in Canada, and as trustee of the Partners Group, a global private equity firm based in Switzerland. Michelle is also the proud mother of a sophomore at the Ross Business School. Take it away.
Thank you, Jay. Good morning, everybody. I'm actually hoping that this interview with Steve does not go the same way as the Megyn Kelly Donald Trump interviews. So we'll see how it ends up, though. Speaking of politics, which of course we can't avoid right now, I thought I'd start off with a recent quote by Maureen Dowd about Donald Trump. So I'm going to read it because I didn't memorize that. Maureen Dowd said, "Real estate developers are con men by nature, trying to get what they want at the lowest price and sell it at the highest price, overpromising how great it is going to be." So, Stephen, do you consider yourself in the same business as Trump? And do you agree with her assessment? This may go the way of Megyn Kelly,
That's a hell of a question
Trump.
to start out with. Yeah, I'm a con man. The only thing, I'm not running for president. No, I mean, I think, real estate is a very exciting profession. And, Donald is probably the world's greatest promoter. And, yes, he started out developing real estate, but he hasn't done that for a while. He's really created a brand with his name. A lot of people are buying that brand, obviously, today. And he's done a great job. And I don't think, I think as a real estate developer today, I think the industry today is much more professional than it was, especially when I started. I think the opportunities in development are quite as great because we're not the growth country, that we were. So I think, I think you have an industry today that's much more professional. And the lawyers have certainly made it that way. When you have to go through the documents and close a deal. And thank you very much. And it attributes well to your firm and all that. But it's a great profession. But I don't really think Donald practices it.
Well, speaking of Donald, I know you were initially a supporter of Jeb early on. So if Donald were to, A, first get the nominee, and then B, get elected, what advice would you give him, both in how to deal with the business world and also just how to negotiate with world leaders?
Well, first of all, you're not going to tell Donald how to negotiate with world leaders. That I can tell you. I mean, I think, the advice I think you'd give it any president is really surround yourself with great people. Because, I mean, it's the most complex job there is in the world, probably. And, I mean, just running a small company, you're only going to be successful if you surround yourself with great people. And as opposed to trying to do it all yourself and, speak off the cuff and think, and so I think, Donald being president, you have to question. I don't think you'd follow my advice, so it wouldn't really matter. But, I mean, I don't know if we'll have him as president or not.
Any different advice for Hillary?
Yeah, don't. bring some Republicans into the cabinet. I mean, today it's kind of, you look at the political environment and you see both extremes of both parties are really kind of, ruling today, and has the ear of the public, and that's somewhat scary. So, whatever I think happens, you want to see this country, we're a moderate country, and we want to really, kind of act that way and have a cabinet and behave that way. And so it's somewhat scary. So hopefully that, you have a balance, some type of balance within the administration, or at least within Congress.
Not to put you on the spot, but if you're asked to serve in Donald's cabinet, would you?
Too old.
I'm taking that as a no, but we'll wait and see. Let's switch gears and talk about something that's like less controversial than Trump and politics, something like affordable housing. Many people in this room are younger than both of us, and they may not even realize that actually Related's roots at the very beginning were in affordable housing. That's how you really started the business. So I have a quote of yours that I'm going to read, which is, your recent quote said, "I founded Related Companies in 1972 with a focus on developing, operating, and preserving affordable housing across the United States, and it remains at the core of our diversified company today. Great cities must provide housing for the full range of its workforce." So we have a large contingency from Chicago here, so I usually don't ask really long questions, but I'm going to read something else because there's some things going on in Chicago. I'm curious to get your insight on what's going on with affordable housing. Many cities are trying to leverage residential developers to increase the supply of affordable housing. We see that in all cities. For example, here in Chicago, they recently amended their affordable housing ordinance to require residential developers to provide affordable housing units on site or within a 2-mile radius, and to increase the per unit fee in lieu that residential developers must pay. So they're taking one approach. How do you feel about that approach? Do you think it's a good approach? Do you think it's an approach that can be used in other cities? And then following on from that, I know you've been very active in New York about that, and to get your views on how we solve a huge problem.
Well, I mean, affordable housing today is so important. Today, as the rich have gotten richer and the poor have gotten poorer. And it's such a necessity, and it's important to every city, and having the diversity that every city has, and being able to service the people. I think one of the first things that I would do is not allow really the conversions of any affordable housing today to market rate. Those buildings were all built, the prior buildings were all built with some type of government subsidy. And I think the developers, because I was one of them who built a lot of them, you made your money up front. And today, with the markets and people really, in looking forward, probably never realized how valuable those assets are. But I think they're more important to the cities and preserving them, because we can't afford to replace all the affordable housing that's been built in the past, and we need so much more. So I would really, one, prohibit the conversions of any type of affordable housing that was built with government subsidies to any type of market rate. And I'm a capitalist, I believe in that, but I also believe that the future of our country is probably more important than making kind of some unjust enrichment from that standpoint when it wasn't expected to start with. I think today's cities really are looking at every way how they can really provide for affordable housing for the people that really need it. And there's a real demand for it across the country. I think every city, it's probably one of the great demands today. And, it's a question, how do you take advantage of the low interest rates to provide, for affordable housing? You're combining it with development of market rate. And I know in New York it's a requirement today. They've increased it. Whenever there's a rezoning, you have to have, I think, at least 20 to 30% of affordable housing will be a requirement that you have. So, I believe in it. We have to be creative in how we can develop it and find the sources of capital, to provide for it. But, I would agree with that, what's going on and how the cities are looking at it.
It's really interesting because we're seeing some, at least in New York, the suburbs are starting to become the affordable housing. I know New Rochelle, Scott Reckler's trying to do some things. How do you feel about these suburbs becoming the new
what's happening,
affordable housing?
Today, people are wanting to move back to the cities, and people in the past, when I was young, all young people were wanted to live and bring up their families in the suburbs, and the cost of the housing in the suburbs were much higher than in the cities. That's reversed today with the inflow. So, and you also have where the bases of employment are. So, I think that, you'll continue to see that. People are going to go where they can afford it, and, it's all a question of supply and demand.
It's definitely a problem that we have. I'm going to go across the pond a little because I know that you guys recently, I remember talking to you a few years ago about starting to look at London, and now you're in London in a big way with your relationship with Argent at Brent Cross and the project there. I'm not sure a lot of people here, everybody's so familiar with Hudson Yards and things here, but if you could talk a little bit about what Brent Cross is, why you decided to go to London, and why you decided to do that with a partner rather than just taking the amazing company that you have and importing all your knowledge across.
Well, I guess when I started the company, it's grown beyond what I really thought it would ever be, and we're always looking for opportunities, and we had tried developing and exploiting our knowledge into foreign markets, and first we went to China, and then in Brazil, and I got to say those didn't work out well. It's a lot more difficult to develop in China than anybody could ever believe, and then Brazil has its problems. But so we were looking really to diversify ourselves, and London, which I initially thought didn't need another developer when you see how developed it is. But then in going there and loving London, it's really one of the great cities of the world. And we were asked to look at a few projects, and then we actually bought a company there. And my philosophy is, after what we've learned in China, is that you really want to be local, and you have to be looked at by the government, by the people there, as being a local. So we bought a company that had been there for 80 years. It was owned by a pension fund and was developing a large mixed-use project, King's Crossing, in London, and they have about 90 employees, and it was owned by a pension fund, and we made a great deal in that they were continuing to develop this large project, King's Crossing, and we saw the opportunity in London where with all the importing or the people coming in from around Europe, that the English really needed housing, and they don't have a really professional rental market there. There's rental housing, but it's not done like it is in this country, or even close to it. So we saw the opportunities there, and of creating a large professionally managed rental housing. So we bought this company, we took it over. It didn't cost us anything. All the employees, the future, they came over with us, and while they complete the projects they have. And we have an English company, and our people wanted to name it, Related Argent. Right. And I said, no, when you're doing business in a foreign country, you want to be looked at by the people as being part of that country. So it's really Argent related over there, though we own 80% of it, of the company, and we got some great employees, great partners, I should say. So we're very excited with the opportunities. And then we put in a couple bids on some government RFPs, and we've won 15,000 units in our first year. So I think the future is great, and I think you'll see a lot of change in the English property markets.
I always hate asking questions about things I don't know, but I'm here. I'm going to do it. Somebody mentioned that You also bought an affordable housing company called Pocket.
Right.
Okay, I called everybody I knew in London, and it's like the world's best kept secret. So can you share that with us?
Well, having started in affordable housing and recognizing the importance of it, and today, when we are even dealing with governments and the way they look at us having started in affordable housing, because when we're building today all these mixed-use luxury projects, you don't have a lot of credibility when you're speaking with government officials who really care about the affordable housing. And the same thing is in London. And there was one company, it was a small company, that had, it was the only company in London that had government's capital behind them to build affordable housing. I mean, we all think today that, the English are much more liberal than we are. If you go over there and we today are much more conservative than they are, or liberal than they are when it comes to looking at how they're providing housing and a lot of different things. So we bought this company because we could see what was going on, the trend of the importance of affordable housing over there. And this was a one company, and it had a dynamic leader, and to grow it, and it really gave us a lot of credibility in really winning these RFPs that we did, and that we were out there and talking about affordable housing and having the one company that had really provided it. So, and we kind of like putting the two companies together.
I was going to say, so is it now Pocket, Argent?
No, we keep that in our pocket.
Keep the pocket in your pocket. That's why I couldn't find anything out about it. So now I know. I feel. See, you shouldn't be worried about asking stupid questions. Sometimes you get good answers. You also are doing some work in the Middle East. So curious about how that's going and how oil prices are affecting their general investment outlook right now. Well,
I mean, we went into the Middle East because back in 2007 we sold a part of our 25% of the company to some of the Middle Eastern sovereign funds. And when they had a problem with one of their projects they were developing, they asked us if we could help them. And at that point, we didn't know, where the United States was going, where the development, market was going. So it was an opportunity to really use some of our people over there and really kind of diversify a little bit. And we took on a project, and Ken Himmel, who you'll hear from later, who really is my partner, runs the retail area. We kind of redid this project for them and planned it, and became partners with. It was roughly a luxury retail project that was a part of a mixed-use project, and now we've increased the size of it, and you'll probably hear about it later today. And it's not easy developing over there. I mean, Ken going back and forth, and because they don't really have the breadth of experience or people that really understand real estate. So when you're dealing with people that have money and don't have the experience and don't really know what to look for or to do, they make it very difficult for you. So it hasn't been an easy process. The project will turn out great. Ken's done a great job. But I think that we've seen enough of the Middle East.
So we've got Brazil, China, and the Middle East out, London in. So we'll go from there.
It's a good place for capital.
But have you seen a change with oil prices, or is they still, the appetites continue?
Well, I mean, there's no question. I mean, they're cutting back, and when you have prices that were at 100 and where they are today, the lack of capital, and they're worried about really so many people in those countries. They're anywhere from a million and a half to 3 million people, and the whole country is really living off the price of oil and the government subsidy that they get. So there's a lot of concern over there, but at the same time, when you're in Abu Dhabi and you see the instability in the other countries and in Dubai, where the people are flocking into, they're still growing. So it's really a question of where you are. But at the same time, no one really knows what the stability of the Middle East will really be. And so I think you have to be very cautious.
Well, I think I'll bring this closer to home now. And just in case anybody missed it, I even have props today. But This is the first time I have seen the big spread. Did anybody see the Sunday Times magazine section on
Sure, we're in Chicago. This is not in New York.
I think people still read the New York Times. So there was an enormous, like 5-page, 6-page, 8-page spread.
These were only sent to certain zip codes in New York.
Okay, on Hudson Yards. So I'm going to be like Vanna White up here with the spread. I'm not going to show Obama, but he's here. So this is an unbelievable spread because I felt like it was the first time you guys, it might have, maybe I missed it, but the first time that there's been this type of full disclosure on Hudson Yards and what's there. So no conversation with you would be proper without getting a whole view on how you're really redefining the West Side. There was definitely some challenges at first in the podium, and obviously I was at Vornado when we bid on it, so knowing all those things, but you're doing it. You're getting it done. It's in the New York Times.
Right. For those of you, I'm a Midwesterner, and I don't assume everybody knows what's going on in New York. So we're developing a project called the Hudson Yards in New York, which is the largest project ever done in the United States. It's roughly 20 million square feet. We have 10 million square feet under construction, and we're really kind of moving or shifting the center of gravity in New York, which I consider to be Rockefeller Center, and creating in Hudson Yards, which is really where we're developing is between 30th and 34th Streets, between 10th Avenue and the river. It's roughly 20 acres of land that will develop 20 million square feet. And today we have under construction 10.5. We've leased out about 7 million square feet of office space to some of the best tenants in New York, including Time Warner, Wells Fargo for the New York headquarters. Time Warner, we're relocating it from the present Time Warner Center that we developed. We have KKR, Coach, incredible number of law firms. We just signed a deal with Milbank to move over there. So we're getting it from every part of the city, some of the best tenants that are coming there. And we have 1 million square feet of retail that's topped off with a 250,000 square foot Neiman Marcus. And it's going to be truly a great mixed-use project. And in the middle of the plaza, we have a sculpture that we're spending $200 million on as a gift to New York, and it'll become to New York what the Eiffel Tower is to Paris. And we'll be announcing that or showing it in September, introducing it. And so it's very, it's been a great success. It's, I think, you can really see how people are really reacting to it and how New York is really changing. And basically, our way of developing it was, and why this was really the first time we've really marketed the project, was we've done it by getting the office tenants first, and then knowing if we got the office tenants, we would get the retail tenants, and which we're doing. And then right now in September, for the first time, we'll be able to offer the residential units to the public. So we've kind of now, these are kind of like teaser ads or showing the world what's really coming. I mean, people in New York are talking about it. The brand recognition is unbelievable, and we've spent virtually no money in really marketing or advertising the project until now, when we can sell the residential units. But the whole concept is creating a city within a city that is probably what people will use as a great example of what a sustainable city should be all about. And so we're really excited about it. I mean, it's building something of that magnitude is something that, as a real estate developer, you can only dream of, to do something that has such an impact and so transformative. And everybody that's working on it, we got a great team. It takes, you can't believe the amount of people that are involved, and and people want to work for us because they want to be part of creating this history in developing this project. So it's
Well, and for those of you who are going to visit New York in the near term, while the weather stays nice, the High Line goes all the way up to Hudson Yards now. So if you start on the High Line, you can walk up to it. It's actually a pretty cool view from up there to see what's going on.
No, you think you might be in Dubai when you see all the cranes. I mean, it's unbelievable when you look at the scope of what's being done and how this will then become really the new Rockefeller Center for the 21st century in New York.
And the fact that you got it done during some pretty tough times, because when the project was first starting, we were in a pretty bad recession, and you got the money, you got the financing, people, and we really, it's real. It's real.
No, it's real.
It's real. It's real. Well, I'm going to go to another great city. Roy, you'll be happy. I'm going to go to L.A. now because there's the Grand Avenue project, which I think has taken so many, I mean, I think it's spanned decades now. I can't remember when it first started. And for those of you who don't know about it, Stephen can tell you a little bit about it. But L.A. has gone through so many changes from the beginning, downtown L.A., from when that really first started to where it is now. How do you see that project unfolding?
Well, we were selected, I guess, probably about 10 years ago to develop a project on Grand Avenue directly across from the Disney Theater that Frank Gehry designed as a large mixed-use project. And during that period of time, downtown has had a great renaissance, or really has become developed, and Los Angeles is having a real downtown for the first time. And so the problem is that we selected Frank Gehry as the architect to develop this. And whenever you're developing with a Frank Gehry, you know you're going to have additional costs, more so than the market could probably afford. But I thought if you're going to do something great and really do something for Los Angeles, and it's directly across from the Disney Theater, you should have a Frank Gehry designed building, because it would become an attraction in itself, because he's probably the greatest, American iconic architect. So, and we really have had to wait through till the market got to the point that we could actually build it. We're still building it at a little, substandard, return rates of return. But anyway, we're now at the point where we're about to start the project. And now the city, of course, they see that we're starting it, they're putting all these other additional burdens on us. So we hope to get it started within the next year. But it'll be very great for downtown Los Angeles. We'll have a hotel there. We'll have an Equinox hotel, which is something that will there, and apartments, great retail, restaurants. And it'll be great for downtown Los Angeles.
So you have my perfect lead-in with the Equinox Hotel. I feel like you're peeking and reading my notes over here. I don't know if a lot of people know that Related actually owns quite a few brands, and I think is really on the forefront for a real estate company for seeing how branding works with the real estate business. One of them is Equinox, SoulCycle, Pure Yoga, just to name a few of them. So for those of you who didn't know, those are all brands owned by Related. And it is unique for a real estate company. So I'm curious to know why you started buying brands, and how do you think it gives you pricing power in your products, or what the impetus was to go in that direction. And then maybe a little bit about the Equinox Hotel brand, which is going into Hudson Yards as well.
I guess my whole philosophy in kind of when I started the business, and I guess I always wanted a great desire to learn and grow, and I think the basics of Related and its success is that we're always looking to connect the dots and seeing how things fit in and how we can grow and be totally diversified. So as part of that, I mean, that's why I think we're one of the only companies today that really is involved in residential, retail, office, and hotels as a developer. But in seeing these other areas that really would have an impact and had great areas of opportunity, we grew into it. And I saw that with Equinox when we had leased them in a number of locations, and we were looking to go public, and they asked me to go on their board, and I was there for about 6 months, and they were trying to do an IPO, and instead I said, why don't you guys just sell me the company? Because it was two private equity firms that wanted to get out so they could start a new fund. And we've grown that, and it's become a great company. And the trend that's going on in the world today is everybody I know, when I'm traveling, I ask my secretary, hey, does that hotel have a good fitness center? And most hotels don't. They have a room, and that's about it. And so we saw the trends and saw the opportunities. We have 300,000 members. We're across the country. We own 100% of really the luxury fitness space in this country. That brand would be great to go into the hotel business because people can identify and wanting to stay there. And we did a survey of our members, and they love the opportunity to say they would always stay at an Equinox hotel if there was one. So we've decided to go into the hotel business, and we have one at Hudson Yards. We have about 6 other locations that will be opening up that we're in the development stages, right now. So, I think, when you're growing a company, there are so many other areas of opportunity. So it's a question of, trying to be best in class, whatever you do, and finding the best people to really run it. And we just have a great team of people that are very excited about really working together and getting all the synergy that's available in the developments that we do.
Do you see, and I have a little, again, inside information having spoken to Harvey and Jeff about this a little bit, do you see yourselves going into the shared workspace place, or do you see that being incorporated into the Equinox Hotel concept, anything like that?
I mean, we've looked at it as certainly something that's going on. I don't know the scale of it, if it's worthwhile for us going into it. I know we're talking to some people about potentially leasing space in some of our buildings. But it's certainly today, when you look at the millennials and how they're working, but since the ease of entry in that is so great, and it's hard to distinguish yourself of being best in class and what one offers, how you can be different, that I don't think we'll really get into it, from that standpoint. But it's certainly something that is a phenomenon that's really occurring.
Do you see the Equinox brand working only in major urban areas because of the brand recognition, so that kind of the main cities that we all think about?
Well, I mean, people travel today, all over. I mean, we're looking, obviously, we're going to cover the major cities in the United States first. We're in New York, Los Angeles, San Francisco. We'll be in Silicon Valley, Chicago. We have a site in the West Loop in Chicago that will have an Equinox hotel. We're very active in Chicago here. I mean, this is a great city, and the development opportunities are fantastic here. And also around the world. I mean, we're getting a lot of people from around the Middle East and Europe are wanting to open up Equinoxes there. And so we're looking now for a site actually in London. So, I mean, we look to be an international hotel company.
That's exciting, keeping Harvey busy, right? I think everybody in the room would love to hear your views on football. I'm going to start with the easy questions, and I'll go to the hard questions after. But I'll start with Michigan. Of course, having been to many games with my son being at the Ross School, I actually have been in the pre-Harbaugh era and the post, and I have seen a dramatic difference in how the team plays and operates under such an amazing high-profile coach. It was almost like high school to the NFL, watching 2 seasons in a row. You guys had a bowl win last year, and I think you're top 10, right? Preseason pick. So you're top 10 preseason. You lost your quarterback because he graduated. And a lot of people in Michigan are diehard Wolverine fans and have really high expectations for the team. So curious to hear your thoughts on next season and the next few coming seasons on where you think the team's going to go.
Well, I mean, I think when you have a football team or you own a football team, the most important position is really who your head coach is. And I think you've seen what Jim Harbaugh has done, what his track record is, and there's certain winners and losers. This guy's a winner, and what he's done for Michigan. And I think, there's probably a number of Michigan grads here. today, and they're all really so happy and thrilled, and can't believe the transformation that's occurred since he's become the head coach. And I mean, everybody in the country is kind of talking about what Michigan's doing because he's thinking outside the box. And I think the future of, as long as Harbaugh there for Michigan, will continue to be great. I mean, they are the winningest college football team in the country, so that's important, I guess, if you went to Michigan.
Or if you have a kid who goes to Michigan. A football conversation wouldn't be complete without talking about the NFL draft, since it just occurred and is on everybody's mind. I know that I've been told by some people, please don't ask the question, and then I've been told by other people, please ask the question. So I'm usually a contrarian. I'm going to ask the question. How do you feel about the draft and your picks?
Well, I mean, we loved the draft. It turned out very well. I mean, it's very interesting. A lot of people are obviously talking about it, this week. I own the Miami Dolphins, and we had the 13th pick in the draft, and the number one rated player in college was a person by the name of Laramie Tunsil, who was a offensive left tackle from Mississippi. And the 2 hours before the draft, someone had posted on his Instagram account a picture of him, or a tape of him in a mask doing Pong. I just found out what that is, so I can't say. That's besides the point. My daughter had to tell me, but anyway, so we came in. You go down there, you have great anticipation of going to to the draft, or you're in your war room. And we never thought we'd get this guy. And all of a sudden I walked in, they showed me this clip of him with his gas mask and smoking marijuana. So, and in the NFL, he wasn't, the draft started and he wasn't picked, and he kept on sliding and sliding. And so when we got to 13, he was available. Now here you get the best player in the draft. And having been kind of one of the newer owners of the NFL, and seeing how they operate, they don't want controversy. They kind of like follow the leader, and you shouldn't. And last year there was a player who was questioned for the murder of a woman, and he was the 9th rated player in the country, or we had him rated, and he never was drafted, and he was totally. They questioned him, they let him go, and that was it. But just because he was being questioned, everybody, really passed on him. So we had done our homework, and I looked at the fact that for 4 months, everybody had looked at this guy, and they really, kind of scrub you in terms of really understanding everything about these players and knowing about it. And, in the NFL, probably 90% of the players, smoke marijuana or have at some point in time. So it's not a great thing, and in many states in this country it's legal. So, far be it from me, to not pick a player because of that. But when he slid down, I said, and we checked him out. We talked to his high school coaches and people who knew him, and we had interviewed him before. He's really a good kid. And so, we were really lucky. People said you were very bold in taking him, and I said, how can you run a business and not have taken him? And you got to forget what the press might say or anybody else. So we are thrilled that we have him. He's a great kid, and I think, to get the number one rated player in the country and the 13th pick, it was a great choice.
Some people say his only mistake was taking the mask off, but I'm just going to throw that out there.
What?
Was taking the mask off. That's from the kids out there. No, I agree with you. I think that, unfortunately, he has some other, family issues, which is just just sad. It's just a sad story because these kids work their life to get to the NFL draft.
Somebody had a vendetta against him, and they posted this 2 hours before the draft. And to see how he could slide so much after all the work is done, I found it hard to believe.
And I think he lost something like $7 million
He lost over $10 million.
Yeah, over $10 million from going from 1 to 13. So pretty sad story. But good for you guys. So congratulations on the pick. I think that it's fitting that we almost close out before we go to questions talking about charitable giving, because you have been so unbelievably charitable, both to Michigan and now agreeing to the pledge. You also set up something called the Ross Initiative in Sports for Equality. So what is that all about?
Well, I think today there's a new standard, in how sports is looked at, and the responsibility as an owner that you have, and the importance of sports in our society today. You saw it all, whenever there is really some type of domestic violence issue, and how the country really, looks at it. And I really experienced it in Miami when we had the bullying incident several years ago with Jonathan Martin and Richie Incognito. And it really troubled me. And we were on the press on the front pages for probably over 2 months, with that issue. And, so I said, how do you really take something like that and make a positive out of it, and what you could do? And I'm from Detroit originally, and I would, just at that point, I'd gone back to Detroit and really saw, I'd been living in New York now for, over 40 years, and saw really what had happened in Detroit. And that was, to me, it was really a product of racism, and really saw, and you see today how that ugly head raises itself so often. It's really the elephant in the room all the time. So I thought with that I could really try and do something, since I kind of owned that space when you talked about it in sports, and how you can use sports today, which is really the common denominator in the world, and how athletes are really role models, and how you could really create change. No one ever has used sports to create change, and so and it has all the ingredients to allow that to happen. So I put together this nonprofit that I formed. I've gotten the commissioners of every single sport in the country to be on my board. NHL, the NFL, Major League Baseball, soccer, hockey, NCAA, NASCAR, PGA, golf. It goes on. Every one of the commissioners, the head of it, is on my board, and I got the heads of all the sports departments of all the networks, and we're going to use that as a vehicle to create change, to educate kids, and we've had a couple pilot programs in Michigan, and it was really interesting in the fact that we had 3 schools that we had these programs, and and dealing strictly with athletes. And one of the programs that was headed up by Jalen Rose, a former NBA star who has an academy in Detroit, an outstanding guy. And he said the players learned to have respect for each other, and they actually played better, and they won games they wouldn't have otherwise won, which is really kind of interesting. And Michigan is adopting it across the state, I know, and they're going to have it as courses that are going to be required of athletes in the schools. And I think it'll, really go down to the fact that the whole university. So I think we can really create change in using sports to create change in this country. And our issue is strictly racism, because to me, that's one of the big issues that no one wants to talk about. It just doesn't go away. But I think overall today in sports, I think you're looking at it as an organization that has an increased social responsibility.
Well, I think it's amazing, because you've given both time and money, and that's something that I think we should admire in you, and we really appreciate what you've done. I'm going to open this up for a few questions, because I know we're almost out of time, and I'm sure I skipped all the really important questions that people wanted to ask Steve. So anybody, it's your opportunity.
Not so many one time.
I couldn't have asked all the questions. Oh, there we go. Okay.
Can you talk about
Miami.
Miami a little bit?
Can you talk about Miami?
Our business in Miami? Okay. I have a partner in Miami that we've been partners now since 1979, George Perez. And we're very active in Florida. We're probably the largest developer in Florida, building condos. And Miami has been a great market. Miami is probably the most unique city in the United States, or probably even in the world, where it has a different culture than the country itself. And because of that, it's such an exciting city. It's a very aspirational city around the world today, and it's a growing city. And it's the one city that really, when we had the recession in the United States, came back faster, even though it had the greatest glut of condos in the market, because because of foreigners were really buying the units and saw it as a bargain, actually, because it was cheaper than the prices in South America at that time. So in Miami today, when we're building, I think we've changed the fact you won't have that oversupply. I mean, right now there's an awful lot of construction going on there, but today the deposits from the buyers we started off, it's gone down a little bit, but requiring 20% when you signed your contract, 20% when we started construction, and you had over 70% by the time the building was topped out. So we were building with the buyer's dollars as opposed to having to borrow, a lot of money. So Miami, I think, will continue to grow. It's a great place, but like anything in Florida, it will have cycles. But I think it'll continue, and it's a large, international city. It's one of the great cities in the world today.
Jay, we have time for one more. If anybody else? I can't see all the way in the back. Okay.
I really admire your story, starting out in 1972, building what you built today. And I think that you also mentioned today's a different world than it was then. That we're not a growing economy like we were then. Development's much more difficult. If you were starting the business today, or if you had a friend whose son was starting a business today, or whose daughter was starting a business today like yours, how would you advise them to approach it differently than what you did 44 years ago?
Well, I think, I do it probably the same way, because, you grow a business, you have to have passion for what you're doing, you have to love what you're doing, and it takes a lot of hard work. And I think, you got to find what you love to do. And, there isn't any one industry. It's really what someone really, has that passion for. And I think if you really work hard, the opportunities are just as great today. It might not be the exact same thing. It certainly wouldn't be the same way. I couldn't have probably started the company and grown it the way I did. But I feel, I traded all over and love to start again today, especially at my age. But I think the opportunities are still there. They're just different, and hopefully, tell everybody is just to seek what your passion is and apply yourself, and the opportunities are there.
Okay, good. Well, Stephen, thank you so much.
Steve.